Hey guys, welcome back to the Business Blox podcast. On today's show, we'll be looking at the updates to the JobKeeper payments, as well as talking about strategies to put in place for how your business can navigate this uncertain period. We'll also talk about some strategies of reducing expenses and how to trade through this period or when to move away from your business. As always, I'm joined by Dale Kitchen. How you going, Dale?
Okay, yep, we've been going good. It's been a lot of updates lately. JobKeeper, payments have started to roll out, which is good. Businesses, a lot of questions, a lot of refinancing, I think is the order of the day. We've had a lot of people who have called up for home refinances for better rates, a couple of business inquiries. But yeah, a fair few people looking at getting their finances in order to either buy or do something, which is interesting.
Okay. Well, that's all good. So today's the 11th of May, and articles have come out now from ScoMo regarding JobKeeper and potential changes. It seems like we could do this every week, discuss the JobKeeper updates.
Yeah, JobKeeper. Well, I think the government know less than us about what's going on with JobKeeper, and we're just trying to keep up with things. So, yeah, ScoMo was chatting again today. He was talking about what he believes could happen to JobKeeper. He wasn't ruling out any changes. He was sort of suggesting that there may be additional support put into industries that have been worse affected than others. There may be a slight possibility of a cut to JobKeeper, and they may be trailing it down early. It's different to what the major accounting businesses have said, where they've said that the 6 months won't be long enough, that this needs to be dragged out for longer. Is that necessary or not? I don't know. I'm not seeing the necessity now for all this additional funding. It may have preempted a bigger drop that never came. Will we need it in the next few months? I would think it'd be yes. We're going to feel that we're going to need it more in, I would say, the next 2 to 3 months, as people sort of use up their resources, as their work in progress flows through their systems, as the invoicings that they did months prior to the COVID sort of event start to flush through the system. We're now sort of seeing business that's been trading in the COVID environment, and that seems to have a downturn into what we were feeling 2 weeks ago. So now we're starting to see the downturn, because we are starting to see what's happened sort of two to 3 weeks ago come through now. So and that's sort of how it plays out.
So do you think the JobKeeper will be part of the new normal?
It'd be nice. It's hard to say. I think, and I'm a skeptical person, but I think JobKeeper was only brought about to keep people off the dole and keep the unemployment rate low. It doesn't seem to be sort of something that can last long term. I just don't know how it's going to be financing it. So they just released, I can't remember who it was, but they were talking about the budget figures, and they're going to be 2 years of $160 billion in deficit, which is crazy.
Yep.
Yeah, so paying that back is going to be the hard part. JobKeeper long term, I think it was a blunt instrument that's not applying support to the areas that it should have. I think it's given a lot of support to areas that didn't really need it, that will probably just bounce back quite quickly. But I do believe that there will be areas of the economy that will be devastated. We're starting to see a slowing up in the construction industry. The actual productivity is starting to slow down, which there was a massive boost for the first month and a half. We're just starting to see less and less jobs that roll through. a lot of developments are starting to come onto the market, small-time developments, which are the sort of the 6 to sort of 10 unit developments, which, months ago we wouldn't have seen hit the market, now starting to pop up quite regularly. And I'd probably say, from what I can see, like 4 to 5 a day starting to pop up, which means that we've got a twofold. So there's a twofold decrease in the building industry, one being new jobs that people are deciding to not go ahead with, and the other is current jobs that are starting to dry up because they were financed 6 months ago and they're starting to come to a close, and we're not seeing any new jobs which are coming into the system. So early indications, and it is early indications show that we're going to see a jolt to the building and construction industry. You've also got the fact that new sales have stopped. So if new sales have stopped and slowed down, then the longer term pipeline, you're not going to see any properties coming out for development in, say, the 6 to 12 months period. So I think that I can safely see problems occurring. We might have a ramp up, which might take that away. So it might just go straight back up again and then pick up the slack. But I think we'll see some pain in that industry. Whether the government will put money into it, I don't know. They went too hard too early, in my opinion. I think they just wanted to shore up the markets. But yeah, it's a very big number they announced. I mean, $130 billion. It's more than I make in a couple of years, let alone one.
Yeah, that'd be across the 5 years. So we just come back to JobKeeper for a minute. So also what we've been doing is pushing a lot of declarations through of turnover and actually reporting to the ATO figures so people can get access to the JobKeeper money. So you just want to run through how the lodgement works and also how long are we expecting till the money comes after the lodgement?
That's been pretty good, actually. So I'll probably touch on 3 things. I'll do the local grant, which is the 10,000 grant from Victoria. I'll do the JobKeeper payment. And what was the other one?
The cash flow boost.
Yeah, the cash flow boost. So the JobKeeper seems to be paid quite quickly. We've had most people receive their money within a week of lodging the numbers, and it's a very easy system. You basically report your staff that you want to claim for. You either list them or they be pre-filled from your payroll system, so your single touch payroll system, which feeds into the ATO. So you confirm that. You confirm that the number of people you want it to claim for, and then you put this month's April sales and then projected May sales, and then that's it. It's very quick. Businesses can do it through their MyGov access. They've just got to set up an ATO link, which we've done that for a few people. But it's very quick. Looking at a week in most cases. There are instances where the system doesn't work and then it drags on for a lot longer, which at the moment is out of control. So we've had instances with the cash flow boost where refunds should have been paid, but what we were told, and this may be rubbish or not, is that because we lodged early, which was close to the end or the start of the month, which was like 1st or 2nd of April, that this was pre-rollout of the system, so they've fallen through the cracks. So we're looking at, a month and a half roughly since lodgement, and we still haven't received credits come out through that. There's no sort of short-term turnaround. So you've got a 28-day standard period before they even access an escalation. So you lodge, you've got 28 days. You can't do anything before that 28 days. You then call up. You then get a 21-day action period, meaning, what are we talking? So that's 60 days Is it
50 days, yeah, 49 days.
50 days, yeah. So 49 days before you're going to get a result. So we're sort of...
Anything you can do about it?
Nothing.
Okay.
So if you ring back up again, they'll just say, we've got your query. We've got a 21-day time period to answer that query. And with the wait on the system at the moment, you're just not getting anything out. Even to get someone to say why it didn't work was near impossible. There was just multiple queries with multiple people. And we finally got someone who just said, this is what we think is the reason behind it. But, yeah, with others, it did pay quickly. So we had other people that came out in the week. So what we sort of see is if you are in the system and the automatic sort of ticks seem to flow through properly, you'll get your money within a week to sort of 10 days. If you're not, months. You don't see the money for months. We've had a couple of people who got paid out on the local state grants, the 10,000 grants, but majority haven't heard. So I think as we got further into the system and as you took longer to get into that one, I think you're getting clogged up with a bunch of other people who aren't getting the money, but there's no indication, no one to talk to about that. So we wait and see. We've got people outstanding, probably getting close to about the 7 to 10 day range, seems to be the average. Yeah, watch and see. I would hope that they get paid out this week. So it's sort of a 2-week turnaround, but stay posted.
And do we know when we can declare May's turnover? Do we know when that becomes accessible on the system?
No, but if you use last month as a rule, probably the 4th of June.
Okay, after?
Yeah. So it was like the end of I think it was Friday the 8th of May, I think was the access date. So it was the end of that week. So it'd probably be the same again. And they were getting payments. So they were getting payments quite early. So I'd say the same again. So if you're counting on that cash flow, you would probably see it by about the 10th of June, I would say.
Yeah.
As a guide, that's probably the time you'd expect it.
And the state government grant, is that 10,000 or have customers received a portion of 10,000 or is it a flat? Do you know?
10,000 is what everyone's been getting. There are different ones that you can get, but we haven't had anyone paid on them yet. So it's just been the 10,000 straight up.
Okay. And then, cash flow boost will then be paid a second instalment in July and later in October. So we don't need to worry about them. And there's nothing customers or tax agents need to do. That will just be executed.
So you just lodge your BASs with that one. There's no process to it. You should just be in automatically. So they will just kick in. So they would start rolling out in, was it July, wasn't it? So they start paying in July. And then they just intermittently roll out after that. But it's a lot of money, and I think they were expecting the worst, and we've come up a lot shorter. It is interesting. I think the problems are going to come from just a contraction in the global market. That's where the issues are going to be. So there's not a lot we can do about it, and I don't believe that we can pay our way out of this. You can't fix long-term profitability issues with a short-term cash flow boost. Meaning that a lot of businesses aren't going to be able to they're not going to be able to adapt to the reduction in turnover, which reduces their profitability, or the increased in built-up expenses that they've built up over these last few months. It's going to be too hard to pay them out over the next sort of year or so. So if I'm not paying rent for, say, 2 or 3 months, then I've got to pay that out over a year. there's another, say, 6% of my expenses or 6% of my profit that goes straight away. Now I've got a 20% drop in sales, and let's say let's say I make half of that, just to keep it simple. So now I've got a 16% less profitable business that's going to be less profitable for a long period of time. So is that really worthwhile? That's sort of the question.
Yeah. So we've pretty much covered off the government grant side of things and all the stimulus packages, and you're touching on cash flow and profitability. You just want to sort of explain that a little bit more into the difference between a business that's running profitable and a business that is running with a high cash flow?
Well, it's the problem you get as businesses get bigger is you can seem like you're profitable without being profitable. What you'll get is you'll get to a position where you have, say, stock, where you have access to loans, you have access to credit with a bunch of people. So what you can do is you can increase all of those things, keeping your cash flow the same, but not actually be making any money. So I could be losing money weekly, but not have to put my hand in the pocket because I've got access to a credit line with a business that I run up slowly over a period of time. So by giving that company a short-term cash flow boost doesn't fix that problem. So it doesn't make it that they're going to continue to make profits long-term unless they fundamentally change the way that they do business or the way that they spend their money or, the way that they mark up their stock or something really fundamental to the way that they make profit. Eventually there's going to be a point in time where they're not going to be able to continue anymore. So because they'll exhaust, they won't be able to gain access to any more credit.
Yeah.
The banks won't be looking at them for any more money, that sort of thing. So by giving those companies a short-term cash boost, you're only delaying the inevitable. And I think that this stimulus is going to do that with a lot of businesses. There will be businesses that okay, we'll have that dip and we'll get through the other side. But, if you look at the amount of debt that a successful restaurant has to bear just to open the doors again in, let's say, they're talking at the end of June, that's hard. I mean, that's a big burden to put around their neck. And with such an industry that it's such a sensitive industry to whether you're popular, whether people are coming at you, whether the weather's right, it's just really hard to make money. If they see a drop in profitability of 20%, I can't see them making or being viable long term. So all this money doesn't fix anything long term. It just kicks the can down the road. So it takes the problem that we've got now and puts it in 6 months' time because that problem's still going to be there. They're not really announcing any solutions to that. So there's no solution to fix that problem. It's just sort of, all right, let's build this bridge is what they were saying. Let's get from one side to the other.
Yeah.
But we're building a bridge from, this beautiful utopian society to a small village down the road. And not everyone's going to come across with everything that they had. So I think that's probably going to be the biggest shock. And I don't want to see people taking on debt. And the bigger the business is, the harder it is to see what your real profitability is and whether you're making money or not. So, yeah, I just say that the people should make the decisions now, should really put time into looking into their business, should be looking at their net asset position, meaning that where have they been in the watermark for the past let's go 2 years. So let's graph that out. And if that's been on the decline and you're going to see a sharper decline, you're going to end up in a position where, it just doesn't end well. And when businesses go down, the hardest thing to do is pull the plug early, but the best thing to do is to pull the plug early because you'll give up a lot just to keep that thing afloat. And and we've seen it before.
Yeah, you won't be able to trade through. And now, just moving on to the small village, I guess that comes. This is a great time for planning if you are restricted in what you can do with your business, because you realistically have to plan for a minimum of 20% drop in demand straight out the gate, if not more. In lots
depending
of
on the industry,
it could be even. Well, pretty much, tourism currently is at zero. So, how does your business look in with that demand drop, and then are you still profitable? What expenses aren't required? What staff maybe aren't doing the job and can be moved along?
And that's the hardest part of this whole scenario. That they say that it's healthy to have clean outs in the market every 10 or so years. It means that the businesses that weren't trading in the way that they should either have to have a real hard look at themselves and change the way they do things, or they go under. So it means that there's a lot of wasted spending that gets cleaned up, and it is good to have every now and then. It's not a great scenario for the people losing their jobs or the markets or the people who are trying to deal with it, but it is for the long-term health of a business, because it's like, not exercising and getting fat. You're not in the best position for when the times do get hard, that you can sort of bring things to move on forward. I just think people just need to spend the time looking at things now. Really, it is hard. I mean, it's hard to make tough decisions based on not knowing, but I think 20% is probably a good area to sort of plan for that downturn. There are industries that haven't seen downturns. There are industries that have. But if you plan for a 20% downturn and you work out if it is survivable and the strategies to get you there, I don't think that's a bad situation for anyone. And it can't hurt, and you'll understand your business a lot better and what levers you can pull before, and then what are the markers that you should be looking at leading up to that time. So where's the hit markers that you should pull that lever, just to make sure you don't really dry that cash flow up. Because once you get to a certain point, it's just like circling the drain, and there's no way out. So, people just end up, it's not good. It's a terrible situation for everyone involved, for the staff, for the owners, for the creditors. It is better to deal with it early. Otherwise, you just end up just with years of prolonged agony for a business that was never going to survive in the first place.
Yeah, and you can use this time, using the metaphor of getting really fat and not being able to do anything, to get the opposite. To get out of that position is learning about nutrition and exercising. And the same thing with business education. Okay, your business is in this state now, and you can learn exactly how it does work. And if you do create a plan, even if you weren't to look at it again, you've still learnt how to build the plan, and you'll always have the knowledge in the back of your head when you are making decisions that this is how things work, and you've got a lot more understanding.
So let's say nothing drops and the market doesn't tank by 20%, everything goes out fine, and we start ramping up exactly like we were at the end. The knowledge that you gained in working out all of those sort of trigger points of your business, you can then use that to grow your business, because they're exactly the same points. So the things that you can cut ramping down, you can also put your money into when you're going up. So it works both ways. It's just understanding what really drives your business and what is the what's the critical points, what's the important numbers, because there are certain numbers that you can look at that will tell you how strong your business is long term. Like, there are numbers that you can look at to show you, around where your sales, where you're not working hard enough, or it's getting into the detail really does help. And I know a lot of people avoid it because it's a it's a very cool. It's a difficult it's a difficult thing to understand, especially when you're looking at, people throw cash flows out, they throw profit and losses out, they margins reports, sales reports, all that sort of stuff. People really don't understand the essence of what those reports are, and if you can, and you look at what they mean long term, you can grow a business based on reporting. I mean, that's the whole industry we work in.
Yeah.
And to get a basic understanding of that goes a long way.
Well, I'd suggest we're more targeting smaller business, but if you're a sole trader or a small company with a few employees, I'd want to look at the expenses you've incurred over the last 2 months where you haven't been trading too much. So mainly what they call fixed costs, but in most cases they're subscriptions, the bills come along, and also even pull out your bank statement, your credit card statement, and look at the last 10, 12 weeks. What actually have you been spending your money on, and has it added to your business? Do you really need it?
Have a look at how your spending increases in relation to your income. So as your income goes up, watch how your spending goes up, and watch what you spend on as the income goes up. You'll start to see that everything fluctuates with that income, and then there'll be a baseline, and you go, well, okay, I can see where my baseline is, and I can see that little bit of extra spend that really I don't need to do, but I spend it because the money's there. So, I mean, with most online systems, you can pull those numbers out now. It's not a hard thing to do, but that'll give you a general overall look at just your spending patterns as opposed to your income. Yeah, and if you want to, you can start to do that with staffing. You need to get into a bit more detail once you have a few more staff, but you can start to look at, what's the base number of staffing that we need. Can we split jobs? A few things like that. So if I've got to split a job on the way down, I can split a job on the way up as well. So if I need to move someone into some other areas. So, yeah, I mean, it's really endless, the amount of things you can look at. You can look at all sectors of the business. So you can look at the sales, you can look at the advertising, you can look at the personnel, you can look at the general expenses. Each one of those areas has literally hundreds of different things you can break down and look at it. And depending on how much you spend in each area, that depends on how much time you put into it. So if your general overall expenses are, say 100,000, rough number, somewhere around there, you can just look at the overall spend and then start to realise what those sort of, those spiking expenses come from. If you got some real numbers, which are a couple of million, that's when you start breaking it down into sectors. You can start to use, look at stock that you hold, start to play with your stock, reduce the time you're holding your stock. Endless.
And ultimately, you could probably, first step would be to think about what you actually want to do with your business. Take stock and see if you want to continue, if it's what it's really panned out to be, or if you want to grow, you're happy with what it is, and see where you want to go with it. It's a great opportunity just to pause now that things are quieted down, nothing else to do in most cases, and address that. How's it been? You've been in trading a couple of years, 3 years. Is it worth what you're expecting? Do I go back to a salaried employee, or what do I do?
Let's say I'm a restaurant, and I've probably had the biggest hit, I would say, in my career. I mean, I'd say that's probably pretty close for a lot of restaurant businesses. Now is the best time to sit down and reevaluate everything. So let's look back at the last sort of 3 years. Let's look back one worked well. Let's look back at advertising campaigns that worked well. Let's look back at things that we did that sort of grew our numbers quickly. When we first opened, what really worked back then? Because there may be a time, and it is a relaunch time. When it comes in a month or two time, that you could be competing for reduced dollars. And what are you going to do that's worked in the past that you've had, this comfort level for all this time? Now you're back to the beginning. Let's look at all that old good stuff. Let's go back to those good times. I mean, it's not all doom and gloom. I think if you do all of this stuff, it can't hurt. It can't make things worse. You're not going to, you're not going to open up. I think the worst thing you can do is open up expecting things to be like what they were previously.
Yeah.
I know a lot of business have done a lot of hard work shifting to the deliveries, and that's worked them through. So, it's all a new world. It's all about just redoing what we're doing to get through, basically.
Okay. Well, we're just about out of time, but I just thought we could touch on a little bit of what we've sort of done for our customers over the past 2 months and how we've found that providing our customers that are on a monthly package, and we offer an accounting services based on a fixed fee across a year, and how we've been able to support them in this time with no issues about having to worry about, we need to invoice this person and will this client be able to pay? It's been a really great partnership.
At this point in time, it's been invaluable. And it's not great for us at the moment, but the clients are getting, they're getting the advice that they need. So the way we look at it is we need to be giving advice when it's needed. And right now, it's when it's needed the most. So we take the hit on the time now because in the long term, that should die down. So we're working, around the clock with no extra charge to the client to give them any answer to any question they've got. So if they've got questions, they can answer them. But that's what we want. If we don't have people talking to us, the people that know what's going on in all the businesses around Melbourne, we know what's going on in a lot of the sectors. They don't. So, they call us up to say, hey, what do you think about this? We're heading down this way. Should we be looking at this sort of thing? It's invaluable. I think it's worked very well. I think it's kept us with a good insight into the inner workings of a lot of businesses. So we get to have a lot of, very in-depth conversations that go on for a number of weeks. So there'll be the concepts, and then we'll move into the discussions, and then, the implementations. And that can be on a lot of different areas, but we give them just a bit of guidance just to know that they're on track. We just talk to them about, hey, this industry is sort of doing this. I don't know about that. Maybe you should be looking in this area. Maybe you should be a bit more proactive in that area. But yeah, it's worked wonders. I think by next year, I don't think we'll take on any new clients who aren't on a package, to tell you the truth. It's just worked out well. But that's, it's been
it
good.
allows, as you said, it allows for those great conversations with no burden on any part, no fear from the customer wanting to, do I need to call Dale? And in most cases, you're finding that you're having time to get on the front foot and calling businesses to discuss how things are going and what the situation is. Like, we were able to, I think pretty much all the business clients were able to get around regarding the 3 stimulus packages that were offered by the government. And we were quite lucky.
We did have an issue early on in that we couldn't actually get to most of the businesses. There was just too much. So we started doing the Zoom meetings. I think we saw potential there to see whether we could build a community around. I mean, everyone was having the same problems. Everyone was having the same questions. So it was good to have that sort of a scenario where people could get together and see, all right, they're having the same problems we have. And everyone was throwing up questions. So, yeah, I think it works good. I think removing the problem of the billing did have a good effect on the conversations. And I'm hoping long term it has the results that we're sort of expecting.
Yeah, for sure. Now, later in the week, we'll be able to continue this. We're going to discuss property market and sort of go into a bit of more information around, are we buying, selling, holding? Is it time to get out of your rentals and sort of where we go from there?
It's a rough market. And we're not financial advisors. We do not provide financial advice. This is clearly for entertainment purposes only.
Yes, exactly. Seek advice from your professional on your personal situation. So as always,
we should probably put that at the front.
Yeah, we'll
put that at the front next time.
We'll bring that forward. Good to chat with you. I'll speak soon.
Thanks, mate. See ya.